Hi, welcome back. So let me see. Okay, so here this is a question. We continue this topic called incomplete records, and this is a subtopic found in topic 4 of the IGCSE Edexcel Accounting. All right. So now this is a very simple question. Let's read the question together, and I tell you what, and I will remind you what to do. Ismella does not keep a full set of accounting records. She has provided the following information. So what we have is we have a bank book, and in a bank account we can see the opening balance. We can see cash received from the trade receivables, payments that we pay the trade payables, and the closing balance. So we have the opening balance in the bank account, closing balance, we have payments to suppliers, and we have cash received from receivables from the customers. Now they also gave you in the earlier year the balance in the trade receivables as at 1st of April, in the trade payables the balance, and the inventory amount. Same for the current year. And they asked you, what do they want? Prepare Ismella's accounts to calculate gross profit. Now earlier on in the earlier video in 4/26, I did an example like this, and this is a good case for you to do. At this point, you can pause my video, attempt this question yourself, then resume it to look at my answers. That would be a good way for you to learn. Okay, I do help you one thing. Gross profit is actually, remember what I told you, sales or revenue minus cost of sales gives you gross profit. I use short form GP. Now cost of sales is what? How do you get cost of sales? The opening inventory plus purchases less closing inventory, right? That is cost of sales. That will give you gross profit. So what do we need? We need the revenue or the sales. We need to know the sales figure. For that, you will have to open your trade receivables T account. We need the purchases figure. For that, we will open the trade payables account. Opening inventory and closing inventory is already here. Okay, cool. So let's begin. So let's look at the trade receivables. So right in full, people, trade receivables account. What do we have? We have trade receivables. The opening figure is 1500. Balance brought down. Okay. The closing figure is 1100. So remember, balance carried down 1100, swing down, balance brought down 1100. Okay, now what else concerns this trade receivables? We have cash that we receive from the trade receivables into the bank account is debit. Remember my golden rule: any account that receives value, debit; any account that gives out value, credit. So into the bank account receives value is to your cash book, and the trade receivables gives out value. So in trade receivables, it must be on the right hand side, and you can write it cash, or you can write it cash book, write 32,000. Cool. Okay, because here they call it a bank account, you're also correct if you write bank account, also can. If you write here bank, that's fine. Okay, so the point is you have 32,000, 1,100 on the right, which comes up to 33,100. So the left hand side should also be 33,100. Therefore your missing figure is 33,100 less 1,500, which is 31,600. What must this be? This is sales. Okay, so sales is 31,600. Okay, so we are going to need this figure. Next, just now I told you we need trade receivables. Now we need the trade payables to arrive at the purchases account. So trade payables is a liability, so balance brought down is on the right hand side, 2,200, right? Now the closing year figure is 1,300. That means the first of the following year, it's also on the right hand side, and you push it back. That is called a balancing figure, which is on the left hand side. Okay, now we have make payments of 18,000 pounds, dollars, I think, sorry. Let's assume it's dollars. Let's assume this is dollars. $18,000 to the suppliers, to your trade payables. So remember, we credit our bank and we paid trade payables. So trade payables receive value. So here you can write here bank 18,000. Got it? Credit out gives out value, comes in receives value 18,000. So what do we have? 18,000 plus 1,300. We have 19,000 total on the right hand side. Left hand side. The right hand side should also show 19,300. But there's a figure here, 2,200. So the balancing figure, the missing figure is 17,100, and this is actually your purchases from your trade payables. Okay, so now we are pretty good. So now you can do a little income statement if you like. So I have an income statement here. Okay, no space here, people. So I just use this just a little bit of space. Income statement, you can write here sales or revenue, which we have obtained the figure. Where's the sales figure? Oh, here, 31,600. Okay, your cost of sales consists of opening inventory. Okay, to save time, I use short form, but please in your exam do not do that. 1,200. The purchases figure is here, 17,100. Purchases 17,100. Closing inventory is 1,600. Closing inventory. So opening plus purchases less closing. Your cost of sales is 16,700. So remember, sales minus cost of sales will give you 14,900, and this is called gross profit. And we are done. Okay, so I'll see you again in the next okay, we'll do another question, but this is a very simple question to illustrate the idea of incomplete records. What do you do? All right, I also understand incomplete records is a pretty technical chapter. There's a lot of double entry involved. Okay, I'll see you in the next video, in the next question.